A lot of people put way too much emphasis on the interest rate, okay, which I feel like, no, you should worry about more, on what you can afford rather than the rate. Welcome back. So as promised in this video, we're going to talk about what a mortgage is. We're really going to slow down the process. Like I said, I'm going to keep it very, very simple. And we're going to clearly define what a mortgage actually is. Most people, whenever they think or hear the word mortgage, they immediately think of a monthly payment. But a mortgage is not just a payment, okay? It is a long-term financial structure that's going to affect your cash flow. It's going to affect the flexibility and stress level, and it's a future, all of your future opportunities, because it's going to get reported on your credit report, right? So it's going to affect you for a long time. So this understanding matters, whether you are a buyer, an investor, or a real estate professional guiding your clients. So what a mortgage really is, at its core, a mortgage is a loan, okay, secured by real estate. And you borrow money from a lender to purchase a property, and that property becomes collateral for that loan. And if that loan is not repaid under the agreed terms, the lender has a legal right to take the property from you. And that is what a foreclosure, right? You've heard of foreclosure. And God forbid anybody's property get foreclosed on. So that's the contractual reality. But in practice, a mortgage is a multi-decade financial agreement that shapes decisions far beyond the closing date. So you want to make sure before you get into a mortgage that you can afford those payments and it's a right fit for you. So there are 4 components to a mortgage, okay? And every mortgage has these components. The loan amount is the money that you're going to borrow. That's the first component. You've got the interest rate, which determines the cost of borrowing and has a direct impact on the monthly payment and the long-term interest that you're going to pay. The loan terms defines how long the loan lasts, commonly 30 to 15 years unless you pay it off early. The monthly payment, which reflects how these elements all kind of interact together and how often it's going to include taxes, insurance, mortgage, HOA. So mortgage payment, a lot of people think it's just your principal and interest. So if you've ever heard of the term PITI, it's principal, interest, taxes, insurance. And if you've got HOA dues, that is actually your full payment for that house, okay? So different tools for mortgages, okay? So there you've got conventional, you've got FHA, VA, USDA, and jumbo loans. So these are not rankings, they are tools. And these tools need to be understood, okay? They are designed for different borrowers, different borrower profiles and life stages, and using the right tool requires you to understand it, not for you to compare. Because a lot of people are like, well, so-and-so got this, and it was a conventional loan, and maybe a conventional loan is not the right fit for you, right? Maybe it was for your neighbor, but not for you. So why this matters for realtors, okay? For real estate professionals, mortgage understanding allows better expectation setting, okay? Earlier problem detection, smoother transactions. A lot of the escrows that fall out, okay? The deals that don't go through isn't because of property issues. They fall out because of financing misunderstanding. So start to understand the lending process. That way you kind of know what's going on, or at least have a general idea on what's going on with the loan. So some of the common mistakes that I see when it comes to getting a mortgage, okay, first one is a lot of people just focus on the interest rate all the time. What's the rate? What's the rate? And the truth is, interest rates, as they go up and down, or if there's a little bit of a difference, if you look at the payment difference between the 2 rates, it's not going to be much. So a lot of people put way too much emphasis on the interest rate, okay, which I feel like, no, you should worry about more, on what you can afford rather than the rate, okay? So a lot of people want to wait for the right timing. My neighbor said the market is going to crash next year. I think that I showed you a chart at the first video on the last 80 plus years with the real estate market, okay, especially in California. Real estate has shown consistent appreciation. So if you're waiting for that right time, okay, you may be waiting forever. And avoiding giving documentation is another one. A lot of people get overwhelmed with the documents that are required. Now, what I've seen, in lending, I rarely even sometimes have to talk to or meet with my clients because everything is electronic. So if you're looking for your taxes, call your tax accountant. They probably have a PDF for you that they can email and copy your loan officer on it. Give them permission. They'll make it easier for you. You can get your W-2s electronically, your pay stubs electronically. So don't get overwhelmed whenever you're asked for documentation. It's not as difficult as you think, okay? So in closing, a mortgage is not something that you need to fear, okay? It is something that you really need to understand, and that is going to relieve so much fear, so much anxiety. And once you get all of your numbers together and really see what it is, I promise you, you're going to feel more prepared and less scared. So I'm going to also give you, there should be a link for something downloadable where you can start to download and see what do you really understand about a mortgage. And hopefully that'll do away with a lot of the anxiety and fear that you have behind understanding a mortgage or getting a mortgage, okay? So in the next video, we're going to cover fixed rate versus adjustable rate mortgages and continue from there. And I'll see you in the next video. And make sure you follow and like for more.